Hello and welcome to Startup Street. I'm Arundhati Ramanan, and these are the top headlines that we're tracking from the startup world. Course MCAI, a social commerce infrastructure startup, has raised $200,000 in pre-seed funding from a group of undisclosed angel investors across India and the Middle East. The capital will be used to strengthen its no-code product suite, grow its affiliate integrations, and expand operations across India and Southeast Asia. IPO-bound OYO expects to raise booking revenue from company service hotels to 44% from 22% by the end of the current fiscal. As part of its increasing focus on India and premium property expansion, Varun Jain, Chief Operating Officer of OYO, said the program is in line with OYO's strategic focus for 2025 for the India market, which aims to drive profitability. PhonePe rolls out UPI payments tailored for feature phone users, leveraging its recent acquisition of JustPay technology. Phone UPI app will provide essential capabilities such as peer-to-peer transfers and offline QR payments, specifically designed to cater to the often overlooked demographic. Government allows Starlink to provide satellite internet services in India. The Elon Musk-led company is the third after Bharti's OneWeb and Reliance's Jio to secure a SATCOM license. The telecom department is yet to approve regulators' recommendations on allocating spectrum to SATCOM companies. Amazon has agreed to clamp down on fake online reviews of products advertised on its UK site. Britain's competition regulator said Google agreed to a similar UK commitment in January after the Competition and Markets Authority launched an investigation into the matter 5 years ago. Those were the headlines that we're tracking for you this evening. In what's brewing, South Korea's CJ Logistics is doubling down on its India play. The logistics giant has infused $32 million to raise its stake in CJ Darsal from 50% to 56%, reinforcing its commitment to one of Asia's fastest growing logistics markets. Now, the fresh capital will be used to ramp up multimodal infrastructure, invest in green transport, and scale tech-enabled logistics solutions, positioning CJ Darsal for leadership in India's next phase of supply chain evolution. Joining me now to discuss this further is Nikhil Agarwal, the president of CJ Darsal Logistics. Nikhil, thank you so much for taking time out and being here with us on Startup Street. If you could sort of take us through what prompted CJ Logistics to increase its stake to 56% in CJ Darsal at this stage of the India growth story.
I think, hi, first of all, good evening, everyone. I think it's, the bullishness on the Indian market and the way logistics industry in India is booming and the way infrastructure is growing in India. I think that's been the key positioning statement for CJ Logistics to further invest into us, to double it down and show their focus on the Indian market.
How are the next phase of growth for the Indian market for CJ Darsal, right? If you could sort of take us through how you're planning to spend these funds and what's going to be new, what are the new offerings on the anvil?
So as CJ Darsal, we have 4 key business developments that we generally focus on. One is road, wherein we are looking in alternate fuels as a solution, such as LNG and EV. Then there is multimodal. We further want to, increase our portfolio when it comes to railway services. Currently, we operate almost 150 rakes across India. We want to further, invest more into the rail business. Third is warehousing and distribution. That's been one of our key growth areas. Today, from 2.5 million square feet of warehousing space spanning across 20 warehouses, we further want to, invest and develop that. And fourth bit is technology. So these are the 4 aspects that we are looking into to invest further.
Absolutely. And what would be the immediate priorities for CJ Darsal's nationwide expansion? Are there, any specific regions or sectors that you're currently targeting?
So we are a pan-India company. I think we've, been there across India and subcontinents. Right. So I think key focus areas are alternate fuels, which are on the cards, right? Where we are very aggressively exploring LNG as a fuel. Some of our clients have also been asking for the same. And on the other side is warehousing and then the multimodal that I mentioned.
Absolutely. And if you could sort of take us through the kind of clients that you're currently servicing and working with, what's the demand that you're seeing and how do you plan to sort of grow this client base of yours?
So I think who's who of India's industrial base, we are a B2B contract logistics company. So we work across sectors with some of the top names that, we all know, right? And I think ESG as a norm is being talked about a lot more in the recent times. Now we believe that OEMs have started offering good EV products and LNG. Infrastructure also is, catching up and being developed. So that's why we are more bullish on them, and that's where we are trying to be more focused upon. As a matter of fact, from last 2 years, entire emissions for CJ Darsil are mapped. We rather work closely with our clients, show them the emissions that we are today incurring and how that can be saved through rail, multimodal, as well as through such alternate fuels which are available.
Right. And if you could sort of take us through the kind of revenues that you're currently clocking, how big is the India market right now? And, where do you hope to end this year? What's profitability looking like?
So last year, we almost, I think numbers are being audited as of now, but we are close to around 5,200 crores in revenue, which was almost a 15% growth. We believe similar sort of a growth level should continue in the coming years. And hopefully more of, alternate fuels would come in, more focus on rail multimodal would be there as, some of the key projects that we are undertaking.
Right. And speaking of alternate fuels, what role will next generation technologies play in CJ Darsil's transformation? Can you sort of share examples of digital or AI-led solutions in the pipeline?
Still under a lot of exploration. We've already kicked in our AI bit of work. We are still exploring where all can that play a big role. Some bit of, I think, a lot of technology-led initiatives are being taken at grassroots levels where, we could have our pilots, drivers, being connected to it. There could be more visibility of things, how we are taking all this technology and visibility to our clients end of the day so that better optimizations at all stakeholders levels can come in. So that's where the key focus is.
Right. And you also kept mentioning alternate fuels. How is CJ Darsil integrating sustainability into its logistics offerings? Are there plans to adopt electric or alternative fuel fleets? And how soon will we see that happen? Because you've mentioned that you're working on it.
So I think this year we should definitely see some of those active role play in investments going into EVs as well as LNGs. EV, I think primarily we believe it's a short haul intra-city sort of a solution where we've done some bit of trials. It has shown us good. Obviously, they are more environmental sustainable, as we all know. But I think financial sustainability also plays a key role. And we believe there is a solution in the intra-city distribution model. On the LNG, we believe is a more long-haul, heavy-haul segment. That's where, from diesel, we can migrate into LNG. Infrastructure is still a concern there because we don't have enough LNG fuel pumps on most of the sectors in India today. We've been talking to a lot of fuel suppliers or the gas suppliers for LNG. Hopefully, we'll be able to connect all the dots here and move forward in the next 3 to 4 months' time.
Right, absolutely. All right, Nikhil, we're completely out of time, but thank you so much for joining us here on Startup Street.
Thank you. My pleasure. Thanks a lot.
And moving on, menswear brand Snitch recently raised $40 million in its Series B funding round. My colleague Ritu Singh caught up with its founder and CEO Siddharth Dungarwal at their Bengaluru store to get the inside scoop on what's next for the fast-growing brand. Take a look.
Well, I'm here at a Snitch store in Bengaluru, a direct-to-consumer fashion-focused brand that is known for its focus on men's apparel and a digital-first approach. Now, the brand has recently raised a $40 million led by 360 ONE Asset and other investors. And that's a significant moment for the company that started just about 4 years back in the middle of the pandemic. Now, in a market which is crowded with fashion startups, Snitch has been able to scale quickly, build an online following, and also expand offline in the past year or so. So today, I'm here to speak with its founder, Siddharth Dungarwal, to understand the significance of this funding, the company's growth plans ahead, and how it plans to navigate the challenges of this fast-growing D2C space. Well, I want to start by actually telling the viewers that Snitch has started bang in the middle of the pandemic, July 2020. Yeah. Just start by telling us, what were you thinking starting up a business when the world was shutting down?
So apparently we started in 2019, more like a B2B brand. But then, within 9 months, the pandemic hit us. And, we were left with a lot of inventory. offline was completely shut. The first thing that came on my mind was go on a marketplace, try and liquidate stock, but then realized, A, maybe we wouldn't be making any money, B, the brand may not get that recognition. That's why we took that leap of faith and started our own platform on July 2020. Clearly remember 4th of July, barely about 35 products, team of 4 people and 2 racks in the corner of our office was the warehouse. And yeah, I mean, since then it's been a roller coaster ride.
Well, let's talk about the brand philosophy. What does Snitch stand for, and who is your target audience? Who's a typical Snitch guy?
So, I mean, Snitch is a trend-driven men's apparel brand. And by trend-driven, we mean that, we want to be not only people who follow trend, but also start, going beyond, a lot of other international brands as well. Our typical TG is anyone in the age group of 20 to 30. And then, over the last 6 months since we've started expanding offline, what we've seen is consumers in the age group of 40 to 50 buy almost 2x of absolute value compared to an 20 to 30-year-old.
Yeah.
So I mean, there's no sort of a fixed TG, but as an entry, it becomes very easy for us to enter any household, with these 20 to 30-year-old because they're more digitally active.
All right, you've got this $40 million Series B fundraising. Congratulations on that.
Thanks.
Tell us how you're going to deploy that money for growth. What will be the priorities?
This fundraise is more like, sort of protecting the brand, creating a shield for ourselves. We've barely utilized, the fund that we received. Yeah.
Okay.
So I think this one is more, protecting the brand. I mean, our aspiration has been very clear that we want to grow offline aggressively. We are at 59 stores.
Yeah.
Hopefully by December we'll cross the 100-store mark. Quick com is something that we're very bullish about. So we would utilize stores as well as our other infrastructure to get into the quick commerce world and obvious aspirations of going global. So hopefully by December this year we should start piloting.
Well, let me get a little bit of a detail on each of those things, starting with the 100 stores by the end of the year. Where will be the focus geographies? Where do you see potential for more growth?
I think, since we're a digital-first brand, it becomes very, very easy for us to, sort of select stores because we exactly know where our consumers are. And, so
what
the
are
obvious
those stores?
choices, the obvious choices are the top 10 to 15 cities, including Bangalore, Delhi, Pune, Mumbai, we're coming up in UP now. The idea is to, sort of start with one store in every city and then, sort of cover up across the city and then go deeper into the tier 2 and 3s.
And when you're talking about these global expansion plans, ambitions that you have, what are the markets? Have you already identified them, and how soon will we see Snitch overseas?
I think in terms of identification, I think we would start off with Middle East, hopefully, end of this year, and then, see the journey from there on.
All right. And, this quick commerce space, that's quite interesting. Of course, we're all used to getting our food and groceries in 10 minutes. Myntra is one of the brands that has started this quick commerce sort of experiment. What are your plans on this front? And from your initial understanding, how much of the additional revenue generation can come from the quick commerce part?
No, honestly, it's not a revenue channel for us. It is more that, consumers love speed. Any sort of snappy experience that you give consumers, they would obviously, remain sticky. And that's the only idea. I mean, we would at least see a 20% incremental growth immediately.
Okay.
But the idea is not to get, extra sort of revenue through that, but more from a, consumer experience perspective.
Okay, and where will you be launching this pilot, and how many cities across your 59 stores?
So I think Bangalore is obviously our hometown, so we would start off. We're already on the last leg of completing our tech stack.
Okay.
Probably by end of next week onwards, we would start off with Bangalore, and then learn from whatever sort of optimizations that we need to do, and then roll out across all stores. Yeah.
What is your USP? Why do you think you'd be able to pull a customer away to your brand?
I think we're fairly widespread. Over the last 5 years, we've sort of created a brand. Becomes much more easier for consumers to choose us because of the sort of experience they've already had. And when it comes to the entire experience of the brand, I think from day one we've been very, very consistent in whatever that we've promised. That is launching new styles every single day. Making sure our experience in consumers across both online and offline is very, very seamless.
Yeah.
Third, we've always been a true and honest sort of a pricing brand.
And we wish you the best with that, Siddharth. Thank you very much for your time here today. Thank you.
Thanks a lot, Ritu. Thanks for having me.
Thank you.
And on that note, it is time for us to head into a short break. But coming up next, Bollywood actor Rhea Chakraborty's brand Chapter 2 opens its first retail store in Mumbai's Bandra. A special conversation on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. From navigating a high-profile crisis to launching a bold new chapter, Bollywood actor Rhea Chakraborty and her brother Showik Chakraborty have turned personal trials into a powerful fashion statement with Chapter 2 Drip. With a flagship store launched in Mumbai just 10 months after their online debut in August 2024 and strategic funding from retail giants Ashni and Kishore Biani, they're redefining what it means to rise above. My colleague Zenia Baria caught up with the sibling duo to dive into their journey. Take a look.
Chapter 2 is about rewriting your story. It's your canvas. Today it's valued at about 38 to 40 crore rupees. Can you tell us about what was the moment of doubt that turned into the spark of you building this brand? And
the tragedy that we went through,
Right.
we kind of both lost our careers. I stopped getting any acting work, and Showik had got 96 percentile in CAT. And he was going to a very big, prestigious MBA college, but that's the same time that he got arrested. And so when he came back out, the first trimester was already lost, and so was his MBA career and his future planning. We realized that we wanted to create something that gives people a voice, makes people feel seen, makes people feel...
Well, from an online store, it's now moved to an offline in less than 10 months. August 2024 was when you guys started.
Yes.
What's the leap of faith you all took in starting the store?
I did not even have the guts to open a store, because when you open a store, your overheads increase naturally, right? And Bandra, Linking Road, the rents are like ridiculously high.
Soaring.
And I was like, listen, we're doing well online. Let's just stay online.
Right.
Life is easier. Because we also are trying to build a community. So if the community does not have a headquarter,
Right.
where are they going to go? So like we're like, okay, we also want to do events. We want to get people together. We want to chat with people about their chapter 2s. That can't happen if we're an online store. So it's pretty much
We also did one thing very nicely, is that wherever we traveled, like maybe it be North India, Delhi, Jaipur, Raipur, I realized that online you can't touch and feel the product, right? Offline, as soon as someone touched a product, felt the quality, they're like, okay, wow, the price points are very good, they're reasonable. And I was like, how can we not have an offline space? And agreeing to her that we need to build that community out more.
Talking about expansion plans then, starting a flagship store here, are you all planning to move to other metropolitan cities or tapping into tier 2, tier 3 cities? Where's it headed?
So I feel like, again, he's the one who wants to take all the risks and the chances. And so he's like, come on, let's do this. Let's open like 12 stores. Let's open 14 stores. And I feel like, okay, let's just see how this store does. And then if we can, of course, let's open.
Okay, but is there any in the pipeline right now?
The goal is that.
The goal is that. And I think in the next 6 months, we'll take it phase by phase. This has to stabilize a little bit first.
All right.
If it was to me, I would just go all out and do like 12, 15 stores this year.
Any cities in mind?
Tier 2 is what we want to target.
Okay.
Ludhiana is a place. We're looking at Raipur, we're looking at Jaipur, we're looking at Northern Belt. And we also want to get into the metros, Delhi, Bangalore. So that's the plan. So we're just trying to phase it out. See, this has just been a week over here.
Right. You know, talking about even the funding, you guys got a funding from the Bianis, which is a big move. So can you tell us, go back to the time when you pitched, and how do you go about with the entire thing?
I called them for a podcast just to chat about, like, I thought I'll get some insights.
Right.
But while we were talking and I started asking for advice from sir, he's like, you can give us free equity. I was like, 1 second, I don't want to give you free equity, I can give you equity.
That's such a smart move.
So I think it just happened in the spur of the moment, and it just turned out well, because if it didn't happen, then, you know, bahut besti ho jati. You know? On my own show, I called someone. And it was really bizarre, because I called up Showik as soon as the funding happened, and I said, hey, guess what? The podcast is over and I got funding. He's like, podcast karne gaye the ki kya karne gaye the? So I think that sometimes there's just a plan that destiny has for you, and I feel like that just fell into my lap.
What was that one line that you said, like that, you know, made you more confident as an entrepreneur while you were pitching it?
I think I was already confident about my numbers.
Okay.
I think beyond a point for any entrepreneur, how much ever jargon you give and how much ever you talk about your brand, if the brand is not doing revenue, then nobody will invest in you.
Absolutely.
But I knew that our brand is doing revenue, we were profitable, and that's why I was like, okay, I can tell you what I'm offering you is still a steal deal.
Right.
I didn't go for some crazy 4x, 5x, 6x valuation, which is oftentimes what a lot of startup founders do. I want A-list sharks on my table, so I have to give them a good deal.
It is Friday, and it's time to take a stock of all the deals that happened in the startup world this week. This week saw 16 deals worth over $314 million. Some of the notable deals include fintech firm Grow, which will raise $202 million from GIC and Iconic Capital. B2B e-commerce firm Udan raised $39 million from Lightspeed Ventures and others. That's not all. EV cell swapping operator Battery Smart bagged $29 million from Leapfrog Responsibility, Rising Tide Energy and others, while EV tech player Vecmacon will raise $8.7 million from Avishkar Capital, Bloom Ventures and others. Finally, menswear brand Snitch bagged $7 million in a Series B round from 361, Ivy Cap Ventures, SWC Global Fund and others. This year has seen a total of 389 deals worth over $3.5 billion. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.